What's going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at S&P Global, and this is not a company that I own. However, I did just get a comment on YouTube asking me to do an analysis. So if you have any stocks that you want to see me go over, make sure you drop them down below in the comments section. But what we are going to do in this video is we are going to take a look at S&P Global's revenue, their EPS numbers, what analysts are expecting over the next year for EPS, and then we'll go over shares outstanding, and I'll give my opinion on this company, whether it is a buy, a hold, or a sell. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at how the stock has performed over the last few years. We can see over the last month, it is down almost 7%. Over the last 6 months, up around 7%. Year to date, this stock is up around 8.5%. However, if we look at the last year, it is up 21, almost 22%. And over the last 5 years, it is up 95%. We can see that it is actually down from its all-time highs of around $475, and it is down around 23%. Let's take a look at their valuation, and in my opinion, the most important valuation metric is the forward P ratio. And we can see right now that S&P Global is trading at a 25.13 forward P ratio. If we look a couple months back, it was trading around a 32, and if we go about a year back, it was trading around a 21. So in my opinion, just looking at the valuation, it seems to be in a fair range for what this company trades at. It's a little bit more premium compared to the market. However, what we'll see next is S&P Global does a very good job of growing their revenue numbers, and that is probably why they have commanded a higher valuation. Before we jump into the revenue numbers, I want to go over their dividend history. And S&P Global has paid a dividend every year since 1937 and is one of fewer than 25 companies in the S&P 500 that has increased its dividend annually for at least the past 50 years. And that puts them on a very exclusive list of dividend kings. And we can see that that list is made up of other companies like Procter & Gamble, 3M, Coca-Cola, Johnson & Johnson, and many others. And S&P Global has a very strong track record of being able to grow their revenue numbers. We can see that at the end of 2018, they were bringing in around $6.25 billion of trailing 12-month revenue. Today, they have grown that number all the way up to $12.06 billion of revenue. And part of the reason we're seeing the stock price slow down a little bit is because we're seeing revenue as well as some of their other numbers slow down. We can see that their growth year over year in the most recent quarter was only 3.6%. S&P Global also has a fairly strong track record in terms of their EPS numbers. There are 22 analysts on Yahoo Finance covering the current year, and they have an average EPS estimate of $12.51, a low estimate of $12.36, and a high estimate of $12.70. This range is also fairly tight for an EPS range. We can see that it is anywhere from $12.36 all the way up to $12.70, which is really only a 30 to 34 cent range, and that is fairly impressive and speaks to the stability of S&P Global's business. These numbers are also in line with S&P Global's expectations that they released in the fourth quarter of last year. They had a GAAP number of $8.65 to $8.85. However, their adjusted EPS number is $12.35 to $12.55. They also reiterated those numbers in their Q2 earnings report, and that really speaks to the fact that the business is on track this year to meet their expectations. In terms of their 2024 numbers, we have an average EPS estimate of $14.42, which is equivalent to a 25.3 forward P ratio. We have a low EPS estimate of 13.96, which is equivalent to a 26.2 forward P ratio, and a high EPS estimate of 14.72, which equals a 24.8 forward P ratio. When we look at S&P Global's historical EPS numbers, we see a little bit of weakness appearing over the last year or so. And this is pretty common across a lot of businesses right now as their margins are being stretched a little bit. And what we could see is that S&P Global in the middle of 2022 was bringing in around $13.42. However, from there, their earnings have fallen in a significant way all the way down to $6.94. And if we compare this to 5 years ago at the end of 2018, it is very comparable to those numbers. We could see that they were bringing in around $7.73. However, 1 quarter before, they were bringing in $6.72. So again, the numbers are comparable to 5 years ago, and that is a little bit concerning. However, their most recent EPS number is a little bit misleading. We can see that their GAAP EPS number for Q2 of 2023 came in at $1.60, which is 44% lower than last year's number. However, if we adjust that number to remove a gain that they experienced during this quarter, we actually get $3 $2.12, which would be up 11% from their adjusted EPS number in 2022. We can also take a look at S&P Global shares outstanding, and what we can see from 2015 through 2019 is that they did a very good job of buying back their shares and reducing this number outstanding. It looks like about 2 to 2.5% every year that they were decreasing their shares outstanding by. So the reason I'm showing you 2015 through 2019 is because there's a vast difference when we look at the current years. This number jumps up significantly, and this actually has to do with a merger that they experienced back in 2022. And we can see this merger mentioned in their Q2 2022 earnings report, where they stated that GAAP net income increased 22% to $972 million, and GAAP diluted EPS actually decreased 13% to $2.86. This is primarily due to the increase in shares outstanding as a result of the merger with IHS. Now, I would expect over the next couple of quarters that we will see them decrease their shares outstanding by around 2 to 3%. We can already see in the most recent quarter, they decreased their shares outstanding year over year by 5.6%. So personally, when I look at S&P Global, I think this is a company that you have to average into over time. You're not going to buy it on severe dips where the stock falls 50%. I don't think this is that type of company. We have seen their revenue numbers, their EPS numbers. They seem fairly safe and very stable. And what that means is you really just have to buy little by little over time and average into it. And as the stock goes up, your position will increase in value. However, keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.